the normal public, the normal average investors out there are looking at high interest rates as a reason to not buy a house right now or to not invest in real estate. And we are looking at high interest rates as the reason that right now is the best time to be buying a house. And it's because of what happens as the Fed has signaled that they want to lower the Fed funds rate. What happens next indirectly is long-term mortgage rates will come down as well. And we look at what happens to home prices over decades when you see a significant drop in interest rates. And what happens is home prices go up almost all the time. So I put this data together. This looked at every time that average interest rates, 30-year mortgage interest rates, have dropped at least 1% year over year. And when that happens, what happened to home price appreciation the following year? And what you can see here is that it's only happened 6 times. So it's not normal for interest rates to drop that much. We're in a special time there. But 5 out of those 6 times, you had higher than normal home price appreciation in the Jacksonville market. The only time you did not was 2008, 2009, which was the Great Recession, which was caused by real estate. So if you take that one out, what should become very clear for everybody is that there's an opportunity for you to get additional equity, to tap into additional equity by buying before interest rates drop. And that's really what we think is going to happen here.
Yeah. And, that is something that we talked about here a week or so ago, this idea that we got so conditioned to this 2008, 2009 dip in prices to expect like buying the dip in real estate as when prices go down, when in reality, the thing that is going to dip is the interest rate, not the prices. And that has a particular effect that we believe we'll see, right?
That's what we think.
Yeah.
That's what we believe is going to happen. It's based on data over decades showing that this phenomenon happens. Hopefully it makes sense to everybody out there.
Yeah.
You'll read a lot of articles now, even when interest rates drop, call it a quarter point or an eighth of a point. You'll start reading articles on your news sources that'll say mortgage applications up because rates dropped an eighth of a point. That's what happens. And mortgage applications mean that there's more buyer demand that turns into more buyers, that turns into more sales, and that turns into home price appreciation, holding all other things constant. So how can you as an investor tap into that and make a decision so that you can set yourself up financially and potentially cut years off of how long it was going to take you to reach that financial goal? So I put the numbers here. I think this is what I'm trying to communicate to folks, right? In April of 2024, the folks who closed in April of 2024 in Jacksonville were buying with generally a 7% interest rate. I went back and I looked at what interest rates were 45 to 60 days before. And so you can assume that most people were closing with that interest rate. The purchase price was $361,600 for the median home sales price in the Jacksonville market. And I ran the payment numbers because people make decisions in real estate based on payments. And so it came out to $1,925 for a monthly payment of principal and interest with that type of loan. Mm-hmm. But what if interest rates drop to 6.5%? And what if interest rates drop to 6%? What effect would home values have as they rise? And what effect would that have on monthly payments? Saying it another way, how much could home prices rise while still keeping that monthly payment, which determines action in real estate for almost every purchase? How could we keep that the same? How high could prices rise? And in Jacksonville, if interest rates were to drop to 6% here, home values can rise another 11% without increasing payments, making this even more tangible for all of us who are investors out here. If that happens, those that buy now would be able to pocket an additional $39,900 of equity, and that would substantially increase your rate of return. So I think this is the opportunity that we all have to make really educated, wise decisions and get the fast track towards whatever your financial goal is to acquire the properties.
So to Smashburn's question, why do 21% of people believe that it is a good time to buy real estate right now? They're looking at this. They're looking at this idea that, hey, this price is never going to go down. It's not going to go down in the near future for me. What's more than likely is that prices are going to go up in the near future based on things staying the same, going to get accelerated if interest rates drop. Therefore, the best thing to do is to lock in this price that we likely won't see again for a long, maybe ever, and get in now. The old adage of don't wait to buy real estate and wait, because of the fact that once you buy real estate, you control that greatest variable that you have, which is your mortgage payment when you're doing a long-term loan or whatever you're doing, right?
Yes. The idea of like timing the market in real estate is not something I've ever really played into, right? We've talked about it over and over and over again on the show. The reason I love this asset class is because you buy it, you have it professionally managed, you hold on to it for a full market cycle, and it takes care of you when you need it to take care of you as you're getting closer to retirement or whatever other milestone you may have. So that's just kind of the standard approach. But there have been a couple of times in our history here on the show, and especially with our clients that we've been serving for almost 18 years now, where I see an opportunity for you to have an outsized gain. There's an urgency to it. And in 2021, it was the debt.
The debt
Was so low. And I said, guys, you need to stock up right now.
Yeah.
The urgency, the opportunity right now is regarding interest rates, because we are expecting interest rates to drop significantly at some time. We don't know when, but we expect that to happen. When that happens, data shows us that home prices tend to go up. And especially against the backdrop of a growing market like Jacksonville, right? Even if you didn't have this interest rate kind of accelerator that we're talking about now, buying the dip, meaning the dip of interest rates, you would still have a lot of reasons. I would still be saying to you, hey, listen, your long-term goals dictate that this is a great time for you to start buying real estate because the fundamentals are strong in it. But here, the fundamentals are strong, and there is an opportunity that I see, kind of a displacement in the marketplace that you can take advantage of and push forward your investments in real estate, because, especially in a growth market like Jacksonville, because I think it'll set you up for success.
Got it. I'm going to allow you to just put a bow on this thing. Should I buy now or should I wait?
Yes. And I've been saying this for a couple of quarters now, that I think this is a special opportunity to buy now. So I put a couple of the reasons here. Obviously we've talked a lot about how I think lower prices are lower today than they're going to be in the future, and prices are likely to go up as interest rates go down. It's a special time for JWB's inventory as well. If we go back years and years and years, I can't remember a time when we had more assets that were already cash flowing day one, already rented day one. So you can buy a performing asset. 90% of our available inventory already has that long-term resident in place, which is a special time. And then we have some incentives that we have been offering as well. We have our maintenance incentive, which is available to every person who buys a property now. You don't have to reach a certain minimum of properties, but you'll get between $4,000 to $6,000 of a maintenance credit per property. And so that's on your first property, 2, 5, 10, however many you invest in. But we do also have additional bundles. You can be the MVB, the most valuable bundler, like Patrick Mahomes. And for our clients,
just for the record, Patrick Mahomes took that from us.
He did. We're still waiting on the
royalty checks. Yeah, he should at least buy a couple properties.
It's true. That's true. Yeah, I'll have his people call my people and we'll do lunch.
Please.
So for those who are looking to push for, so if you can take this information that I'm talking to you about right now, and you use this, you sit down with our team, we put a plan together, and your plan is to invest in, call it 3 properties or 5 properties over the next few years, and you have the opportunity to push that forward. Not only will you take advantage of the market dynamics that I'm sharing, especially about interest rates going down, but we also have incentives for those who purchase multiple properties at one time. So if you buy 3 or more at a time, you'll take $5,000 off the purchase price. I had a friend that I helped build a portfolio for. He bought 7 properties, so it was $35,000 off the purchase price for that.
Not too shabby.
So
Not too shabby. Just like a 3 Series BMW off the purchase price.